Oof, guys, things are starting to get ugly out there. We had a Chinese company, which I'm sure you guys have heard of, Evergrande, right? Everybody and their grandma's heard of that company. They just filed for Chapter 15 bankruptcy yesterday, which we're going to break down in this video. We're going to go over what happened, Chapter 15 bankruptcy in general, what does that mean, and we'll break down some Chinese stocks and the overall markets later in the video. So if y'all find value, hit that like button. Make sure to subscribe. We're almost at 30,000 subs, guys, and make sure to follow me on Twitter at StasserFest, and make sure to follow me on Instagram as well at StasserFest. I'm very active on both of those platforms, and with that being said, guys, cheers. Let's dive right into the video. So right now, overall, the U.S. markets are all over the place, right? All the indexes here in the U.S. are all over the place. We have the Russell up 0.6%, the Nasdaq's down 0.1%, the S&P's also down 0.1%, as the Dow's at break even. So pretty chill day, I guess you can say. Overall, right now, it's currently about 3:40 p.m., so we're over halfway through power hour, and it looks like all the indexes, except for the Russell pretty much, which the small caps are doing well. To me, guys, it looks like everything else is going to break even on the day, right? And it looks like here SPY is starting to fall through this spot right here, 436, 437, which we'll talk about later in the video, and Triple Q, which tracks the NASDAQ 100. You guys know that this is starting to fall through this big spot, which is right around 358, which we'll talk about later in the video. But actually right now we are back over 358. But earlier in the day, we got down to 354, which is not a good sign. So let's talk about what's going on here with Evergrande. And you guys know Evergrande, that's been a huge topic in the news over the past, year at this point? Hold on, guys. Let me pull it up here on Google Chrome. Bear with me. So let me show you guys what Evergrande even is, if you guys don't even know. So you can see right here, Evergrande Group, which is a real estate company, you can see right here. The China Evergrande Group is a Chinese property developer and the second largest in China by sales. It is incorporated in the Cayman Islands, a British overseas territory, and headquartered in the Huai Financial Center. I'm not even gonna attempt to pronounce that, guys. In the Nanshan district in Shenzhen, Guangdong province in China. Yeah, I try my best. I try my best on that, guys. And this company was founded in 1996, but they're the second largest property developer in China, guys. That's no joke. This is not a small player. This is a big player. We all know that. Everybody at this point knows that, right? And if we pull up this CNBC article, let's break it down a little bit. The headline says China's property giant Evergrande, or Evergrande, however the heck you say it, I think it's Evergrande, either way, files for bankruptcy protection in Manhattan court. And this came out officially yesterday. Let me actually make my big old head a little bit smaller. There we go, guys. Let me actually zoom in a little bit here, and we can see what's going on. So let's scroll down a little bit here. China's heavily indebted property giant Evergrande, and mind you, heavily indebted, right, filed for bankruptcy protection on Thursday. Chapter 15 bankruptcy to be exact, guys, which if I pull up this tab, let me show you exactly what this means. So Chapter 15 is a section in the U.S. Bankruptcy Code that was added in 2005 to provide for cooperation between U.S. courts and foreign courts when foreign bankruptcy proceedings touch upon U.S. financial interests, which is what's going on right now. And if we come down a little bit more here, the primary goal of Chapter 15 bankruptcy is to promote cooperation among U.S. courts, their appointed representatives, and foreign courts, and to make legal proceedings of international bankruptcies more predictable and fair for debtors and for creditors. As such, Chapter 15 focuses on jurisdiction. It also tries to protect the value of debtors' assets, and when possible, financially rescue an insolvent business, which, who knows, are they insolvent? Chapter 15 allows a representative in a corporate bankruptcy case that has been filed outside the United States to obtain access to the U.S. court system, which, again, they file for bankruptcy in the Manhattan courts. I just said that a minute ago, right? In a filing to the Manhattan bankruptcy court, which you guys know where Manhattan's at, right? Or at least I hope you know where Manhattan's at. And this is intended to provide an efficient and common sense mechanism for addressing insolvencies that involve debtors, creditors, and assets associated with more than one country, which in this case, that's the case, right? And the purpose of Chapter 15 is outlined in the following objectives listed in Title 11, Chapter 15, Section 1501 of the U.S. Code, which you guys can see right here. Let's read this off and go back to that CNBC article. So, promoting cooperation among U.S. courts and parties of interest and the courts of the other countries involved in cross-border insolvencies, establishing a better legal foundation for cross-border investment and trade, providing for better administration of cross-border insolvencies that protects the interests of all parties and protecting the value of the debtor's assets, and assisting financially troubled companies. So that is, those are the main objectives of Chapter 15 Bankruptcy and Title 11 of Section 1501 of the U.S. Code. You guys can look deeper into this if you want. I'm not sure if you'd want to. I mean, the stuff's pretty boring. But that, in a nutshell, is what Chapter 15 Bankruptcy entails. And coming down a little bit more here, guys, the company referenced restructuring proceedings in Hong Kong, whatever, the Cayman Islands, and the British Virgin Islands. In a separate statement, Evergrande on Friday said that it will ask the U.S. court for recognition of the schemes of arrangement under the offshore debt restructuring for Hong Kong and the British Virgin Islands. It also added the application is a normal procedure for the offshore debt restructuring and does not involve bankruptcy petition. And if you guys don't remember, the world's most indebted property developer, this company, defaulted in 2021 and announced an offshore debt restructuring program in March, and trading of Evergrande shares have been suspended since 2022, March of 2022. So that's been quite some time now. And look at this, guys. This is nuts. In July, Evergrande posted a combined loss of $81 billion over the past 2 years after struggling to finish projects and repay suppliers and lenders. Think about that. $81 billion. Not many companies could recover from that, guys. That is insane. Net losses for 2021 and 2022 were 476 billion yuan, or roughly 66 billion US dollars, and 105 billion yuan, or 14.76 billion dollars, respectively, as a result of property write-downs, return of lands, losses on financial assets, and financing costs, according to the company. So, in other words, guys, to put it in layman's terms, Evergrande was in deep shit, right? You guys know what I mean? And, they defaulted. Now they're filing Chapter 15. It is not looking pretty for them at all. And could this ripple across the Chinese economy, which then could ripple across the global economy? Maybe that's a possibility. Will it happen? Of course, nobody knows. It's not a guaranteed. Do I think that's going to happen? Not necessarily. I mean, I'm not an expert on this by any stretch of the imagination, guys, but do I think that's a possibility? Yes, but is it a probability? Probably not. At this point, we have a lot of the Chinese names selling off today. We have Alibaba down 3%. Not the end of the world, nothing crazy, but it is back to selling off after just being above $100. It seems like every time it just touches above $100, Alibaba stock, it gets allergic to being over 100, and boom, it goes right back under 100. So Baba's back under 100. It's collapsing pretty much the past couple of days, and today it's down 3%. We have JD down another 5% today. This is pretty much at the lows on the 4-hour chart, and if I pull up the 3-year chart on JD, we're literally at the lows. So at this point, guys, I'm not telling you what to do. Of course, I'm not a financial advisor, but these Chinese stocks are so beaten down at this point. If you have a super long-term perspective, it might be worth a shot. Am I buying these right now? No, I haven't bought Chinese stocks in a long time. I still own Alibaba, but I've just been sitting on that for a while at this point. I don't even remember the last time I bought Alibaba, but I'm not coming in and scooping JD yet or any of these other names. But look at how beaten down they are. It's always enticing, but then I'm always like, it's China, the CCP. Nobody knows what's going to happen. These businesses, yes, it's kind of like it's a weird situation they have going on over in China, right? Yes, they're capitalists in some sense, but at the same time, the government could just stomp on a business and do whatever they want to the business, right? At the end of the day. So it's a weird, it's a weird situation, no doubt. And for that reason, I'm just not putting money right now. But it is enticing, no doubt. Seeing these companies that make so much money, top line, bottom line, down so much on the charts. It's crazy. JD's down about 70%. And this company's massive in China. 10 cent is down, let's see here, from $100 to $41. It is down 60%. That company's huge. You guys know, right? Let's see, Alibaba. We already know Alibaba's down a lot. That's down from $320 now to $90 per share. Unbelievable. So what do you guys think? It's down 75%. So this could hurt the markets, maybe ripple through the Chinese markets. I have no idea. I mean, it's anybody's guess at this point. But yeah, that's the news. Chapter 15 bankruptcy, guys. Evergrande is pretty much toast at this point in time. What do you guys think? Let me know your thoughts in the comments. Hit that like button. Feel free to subscribe. We're almost at 30,000 subs, guys. And don't forget to get your free money from Moomoo, up to 16 stocks, each up to $2,000. Just use that link down below. Once you open up your account and fund it with at least $100, you get 5 stocks right off the bat. And listen to this, guys. Fund your account with at least $1,000. You get 10 more stocks, totaling 15 stocks, and each of those could be valued up to $2,000, by the way, guys. And if you fund your account with at least $5,000 on top of those 15 stocks, you also get a free share of either Tesla stock or Expedia stock, which makes this promo a no-brainer. So get on it, guys. And of course, that is an affiliate link. It helps out the channel, so use that link down below. I appreciate you all as always. And with that being said, cheers. I'll see you later.